Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is September 26, 2025. S&P sitting at 66, 16, 66, 17, somewhere around there. My name is Ian McMillan. Today I'm joined by our analyst, Kevin Ferrari. Not the most eventful week in stocks, at least. Anywhere you would like to get us kicked off for this episode?
I don't know. I mean, yeah, definitely underwhelming week considering how we started the week. I mean, Monday was a pretty good day, and then kind of just petered off from there. But
yeah, Monday was a good one. We've given, I guess, a little bit of, more, giving it all back and more so. But
yeah, I mean, really on the week, things performing well are pretty much, generally speaking, would have been the relatively worst performers up until this point. Like energy utilities, top performers on the week. Real estate, just a hair. Positive. I mean, healthcare, I guess, is the one that still is probably the worst. Still down on this week, but
sorry, I didn't know any of that.
Mm-hmm. Which, right, you're going to have those weeks, right, where some of that stuff that, relatively speaking, has been underperforming, other areas, they got to kind of keep pace at some point. So, I don't know. I mean, I guess just scanning through like workbooks, individual charts, just seems like things kind of want to just take a break here a little bit.
It does feel like that in market gods. If you're listening, we're not complaining. We'd much rather go sideways than go down. We could go down. We could have a correction. We made it through August and September. There's a historically can have some volatility. Now people say, oh, October is volatile. I don't know. I kind of feel like that gets like every month. We're like, oh, this could be it. And then like I saw recently, October. October is supposed to be, so we're August, September. So,
all right.
Yeah, not saying it can't happen. Maybe a little shakeout before we move into a bullish period.
Yeah, because, right, like seasonality-wise, end of the year is supposed to be pretty good. But, I mean, to your point, if we had, relatively speaking, August and September really weren't, that bad. August, we didn't really go anywhere. September is pretty good. So, I mean, is this, right, these are all seasonal averages, so you got to be on both sides of the equation.
It's so ridiculous that we are 2% off the highs.
Mm-hmm.
And we're sitting here. I mean, I don't know. We've been pretty spoiled.
That's true.
I mean, March and April, early April kind of sucked, but it's pretty spoiled for like 5.5 months. So I think every little creak in the floorboard, people get a little antsy, but we held up well. I mean, we also had our chances. Did they do Fed stuff this week?
Good question.
What was that last week? I can never keep up.
Well, wasn't the rate cut last week? Or is that 2 weeks ago now already?
This is how much I pay attention.
Right.
Maybe that was last Wednesday.
But yeah, I mean it.
Oh yeah, it was last Wednesday, the 17th.
Was it? Okay.
Yeah.
So I don't know. I mean, at least the way I see it, under the surface, I don't think really anything's changed, right? Like your areas that were outperforming still hold up well. If you look at like high beta, low vol, still showing positive signs, growth versus value, at least with like SPYG to SPYV. If you use like the pure growth and value, like what is that, RPG, RPV, not quite as clean. But yeah, I mean, there are things, right? Like to your point, we had some chances to, make some headway in some of these areas, like, materials kind of got rejected again using XLB around $93. That's kind of continued to pull back.
Well, of course, you got the miners,
right? Which is really the only thing performing well in materials.
And they do look good. I mean, gold miners, and now you've got silver versus gold, the physical metal breaking out. So you've got gold looking like it's going to do better. Sorry, silver is going to outperform gold for, I don't know, foreseeable future until that trend changes. But both those the stocks of mining companies in those areas gone pretty vertical over the last few weeks, and they had a really good move before that.
Right. Yeah, and some of those too, or I'd say probably a handful, which I'm probably not going to be able to even think of the companies and tickers specifically, but it definitely seems like some of those kind of nearing some, areas of relative resistance, which I think is kind of a theme even just outside of miners in general, where it's kind of interesting how a lot of these areas that are pausing are kind of pausing at areas of previous relative resistance. So just interesting how that is kind of shaken out so far. But I mean, mining is, even copper miners, at least on an absolute basis, have been doing really well. I mean, relatively speaking, not much of a play there. Uranium's kind of picked up the pace again too, which is good to see.
Yeah, uranium has had a very good week.
And I mean, that's kind of, boiled over into like international areas, right, that are more heavy mining, like Africa, broadly speaking, South Africa. Now, Peru, we were talking about a little bit before we hopped on, how crazy that chart looks.
Yeah, Peru. Yeah, I guess all big mining economies.
Yeah, and really, I didn't realize, just in materials in general, how heavy that was in like the chemical space. I think it's like 50-55%.
I think it's ridiculous.
And like metals and mining is,
I guess those are your big companies, right? Like
right.
Dow, DuPont. Well, I don't think it's called Dow DuPont anymore. But yeah, stuff. It's random stuff.
Yeah. Kind of talking about, interesting relative levels, like XLK for tech is at a pretty interesting level versus the S&P. If you kind of look at that one going back to kind of late 23, early 24, it's kind of getting into those highs. So, which is kind of where it's pausing now, right? Which is kind of interesting how that's shaken out. Even if you look at energy, so XLE to S&P, previously back in like, 2020, 2021, kind of those highs there is kind of where energy on a relative basis kind of pop back up here. So is it finding some more support there? And, maybe energy kind of claws its way out of the basement here a little bit. It's a little early to say that now.
They've given back so much of that. To look at that chart, that is...
I mean, that run in 22 was wild for energy.
Yeah, it's such a good start. Just slowly trickled. I mean, and I guess it just hasn't done anything on an
Yeah, I mean, energy and materials on an absolute basis look pretty similar to me. I mean, energy, I think the absolute chart looks a little bit better just because it hasn't really pulled back here as of late. But yeah, just not really moving anywhere. Well, the S&P's at least kind of grinded higher a little bit.
Yeah.
So,
what do you think about fixed income? Anything cool going on there? Personally, I'm starting to get, I don't know. I would say not disappointed, but there could be some things there that I think aren't worrisome, but we're not cruising. I don't feel like we're in the left-hand lane.
Right.
Going 80 miles per hour in the fixed income space.
Yeah, like junk is a little disappointing. J&K, like, looking at that on an absolute basis.
You say you like HYG better?
Well, I was actually just kind of surprised looking at HYG versus J&K, like how consistently that's, outperformed J&K over the last, probably over 10 years, about 10 years now, actually even longer.
Wow.
Which I guess kind of surprised me. But yeah, I mean, the absolute chart of HYG looks a lot better because really, once J&K got above, what is that, like 90, call it like 98, and it, at least as of yesterday and today, hasn't been able to stick that. That's kind of disappointing. But, HYG in an absolute really doesn't look too bad at all. Using like $80. I mean, it's been maybe 80, 81. It's been above that level most of all this month. It's held that. So, and I think generally speaking in the bond space, it's still get the idea it's still kind of risk on, right? Because like convertible bonds are still holding up pretty well. I mean, those are kind of pulled back this week a little
Yeah,
bit.
that's true. That's a good point.
International bonds and like more specifically like emerging market bonds is kind of the place to be there. In the international space, those have held up well. I mean, also kind of the same case, pulled back a little bit this week. But, I don't really get the sense necessarily that within the bond space there's really a flight to safety necessarily. So,
No.
depending on the kind of what, products you use to look at it. I mean, looking at like triple Bs versus triple As are, it's not the cleanest look in the world necessarily, relatively speaking, kind of range bound here. But I mean, they're at least holding up, like triple Bs using like JBBB is one I usually use on an absolute basis, is holding up, which is good. So, yeah, it feels like if junk kind of got it together there a little bit, that we could have made some headway, but, we'll see. TLT, AGG, kind of your, longer duration stuff had pretty nice week last week. That kind of sold off a little bit. So I guess as of now, it seems like it's going to be more of the same.
Yeah, and still really not getting to move lower in credit spreads either, which we don't have to. I was actually looking over that this past weekend, and I mean, you can have some pretty strong, look at like 2017, you had credit spreads bottom in February, moved higher all the way through November. Now they weren't ripping higher.
Mm-hmm.
They were higher, and that was obviously a pretty low volatile year. So maybe, I don't know, we'll see. Again, market's certainly not something where you need to have every box checked before you get involved, every box unchecked before you become uninvolved. But yeah, I feel better. You've eased my concerns in fixed income with your bullet points on convertible and emerging markets.
So historically speaking, when I have to fill in on the podcast and they talk about something like that, usually it's the total opposite the following week. So
No,
I guess don't count your chickens necessarily, but
good time to pay note to the supporter of this podcast, the Adaptive Select F, listed on NYSE under ticker ADPV, helps investors access two of the most prevalent factors in markets: momentum and relative strength, through proprietary identification methods. The Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, the Adaptive Select ETF seeks to prevent extended declines by moving to short-term treasury bills and cash during market downtrends. Investors can find out more, including how to invest in ADPV. That's the most important piece, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors, LLC. Have you ever lost your principal? In investing? I have.
Oh yeah. Yeah, plenty of times. I guess the trick is to, at the end of the year, make more than you lose, right?
Yeah. Better go find some more. If you
Mm-hmm.
lose. Anything else you'd like to share with our guests before we ride off into the weekend?
Yeah. So this one kind of slipped my mind when we were talking about kind of some of the relative charts that looked interesting. So like discretionary versus staples, XLY versus XLP. It's one I like quite a bit. So pretty nice move past, kind of the, late 21, kind of late 24 highs there. So, I mean, that's right. Not necessarily an indication of risk off by any means. Although I'll say not really a huge fan of discretionary on an absolute basis. I mean, I think the weekly looks a little bit better than the daily necessarily. Like on the daily, it would have been nice if that could have held, 240, but I can definitely see it holding like 235 here and it'd be fine. So it might just be a case where maybe it makes a little bit more sense to kind of widen your time frame out a little bit there. Kind of somewhat discretionary related. You know, a lot of your, I don't know what you want to call these, like future transportation, like your transportation tech stuff. Like a lot of those ETFs, like CARZ, KARS, those have been doing really well. And just kind of, I mean, Tesla had a little bit of a move, here. I wouldn't say it's, really if that could kind of get out above like 445 and kind of stick that would be nice. But really, it looks like a lot of that is more so fueled by, like Google's and some of those, which has done really well lately. A lot of Chinese exposure, which China's been doing pretty well, holding up well. Or, like semi-exposure, things like that. So it's really not even necessarily the names like Tesla. I can think of like some of the other EV company names that you would really kind of think of firsthand. So I thought that was kind of interesting. Other than that, Caterpillar looks really good.
Boy, well, let's let the rest of the large cap industrial complex know.
No kidding.
Holy cow.
And I mean,
voice.
I will say that, looking through like aerospace and defense names, it looks like those might kind of start picking up the pace here again, which I think is a good sign.
I did see that. Nice little relative turn, hopefully.
Mm-hmm. I mean, XLI has been pretty tight here. I mean, you got some pretty nice levels you can work off of.
Got to do it, though.
Right, that's the thing, right?
Got to put the ball in the end zone, XLI. We have to break out.
So that's probably one to watch the next few weeks. And yeah, really other than that, not too much. I mean, commodities-wise, grains still pretty rough. A lot of people aren't very happy with China on that one. And I think kind of the news there, China not wanting to buy U.S. soybeans, which is not making people happy. And
is that the word around town out by you?
That's what it sounds like. And then they're not really wanting to buy canola from Canada, but I guess they're getting it from Australia. So I don't know. I guess that's news.
I'm sure you're quite educated on the canola trade now.
Yeah. So far, so good for me. Not so much if you're on the long side of that.
There's all the international trade routes.
Tracking all the tankers that go across the ocean. Yeah. I mean, oil just kind of hanging around. Metals look really good. Platinum was the one this week with a really nice move.
Yes.
It's kind of the new one. So,
is uranium considered? Can you trade uranium futures? Probably not. Is that illegal?
I don't know.
Is uranium? Yeah, here's the uranium. This can't be right.
It looks pretty thin, which probably makes sense. Or I'm sure that's not real widely traded.
I mean, is uranium available to the public?
I would assume in any high quantity, I wouldn't think, right?
Let's see. Can anyone buy uranium?
I mean, I think you can.
Small quantities.
Right.
Processed. Yeah.
Which I think is more of like a...
You can't buy refined or enriched uranium.
Which makes sense. Can't get that on Amazon?
I have to have a special license through FINRA. Or wish.
Sure, the FBI would probably want to keep tabs on that too a little bit. So if you start,
there's a Series 65 exclusion rule. Oh, you passed your 65, you can have a uranium license.
Might have to look into that.
It's a national security issue. Yeah, no kidding.
Enough said there.
All righty.
Yeah, I mean, for me, that's about it. I guess definitely wouldn't be surprised if we kind of just hang out here for a little bit. But, I mean, one way or another, we're going to find out, right?
Kevin says we're hanging out. I'm down for that. It's the weekend, so.
Exactly. No better time to hang out than the weekend, right?
Thank you very much for joining us this week. And we'll talk to you again soon. Have a great weekend, everyone.
Take care.